I'm going to go ahead and get started. Hope everyone is doing well this morning and ready for day two. We're going to do a little bit of review and then move into more of the volume profile. One thing I will let you know, I think some people sent me email last night. I messed up in my email access, and so we're working to get that back. So if I didn't respond to you, I will once I have that access back. I just wanted to let you know that I was not ignoring any email. All right, so let's go ahead and take a look and get started here with with day two. And again, I want to talk through what we're going to be looking at today and the things that we are going to go through. Specifically, the volume profile relationship to order flow. We're going to look at building market context using the volume profile, and then using principles over time. And then we're going to have a test later today. The other thing we're also going to go through is the elements of the volume profile and the attributes of those elements. So we're going to actually start talking through, go through a review of yesterday, and we're going to go through the elements of the volume profile and then the attributes of those elements, and then we're going to take a look at volume profile examples, and then we're going to get into current market scenario and get to start putting a few of those pieces together. So the first thing I wanted to do is review day one. This won't take too long, but just to recall from yesterday, the market is really defined as all active buyers and sellers. So, and we've talked about this. I know DB has certainly brought this up, and historical information relative to the market is always good information to do planning and good information to look at specific areas. However, it is a point in time active buyers and sellers that will determine price movement at any given time, and that's the frustration of the market, but it's also the challenge and fun of trading in the market, is that nobody really knows what will happen next, and but it is determined by active buyers and sellers at any given point. And they are the only ones that can move price at any given point. And our job as traders is first to be risk managers. It is really all that you control is your risk. You can't control the trades that come in after you place your order. You will inherently improve your trading when you learn to trade with market participants and manage risk objectively, not hopefully. And what that means is being able to learn to read the print, first identify the areas you want to get in, read the print, and then use the print and order flow to effectively and objectively, more importantly, help to manage your risk and your profit. Again, order flow is the interaction between the buyers and sellers, and it also provides us with context over time. And context over time is what is the market trying to do, and how effective is it in its attempt. And then also a point in time context. And basically what we're looking at that point is, does the print confirm the trade? Am I seeing what I want to see between buyers and sellers to get into a trade? Some of the principles of an auction that we talked about yesterday. First of all, price will continue to move in a specific direction until the other side steps in to shut that movement off. Now, this is true whether we're looking at the ES on a late August day and we're moving up and down in a 2.5 point rotation, or we're looking at a CL chart and we're moving up and down in a 50 tick rotation. The market will continue to move in a trend day, in a rotation day. If we're looking at a balanced day where price is moving up, price is moving down, we can see the rotation beginning to occur. We can see it in the volume profile. Then at the bottom of that range, it's likely to move up. Top of that range, likely to move down until something else happens. Either one side steps in to continue that move. Otherwise, it's likely that the other side's going to step in, shut that movement off, and turn it back around. The market will move from balance to imbalance, and every market does this, and there are never more buyers or sellers, just more aggressive ones. As a process for context, some of the things that we're watching when we're trying to gain context from reading the print, we're watching these things. Where unusually high volume comes into the market. We're looking at things like the volume cluster analysis. And I'm going to show you a very, very simple tool that I use just as kind of a trigger or an alarm when high volume is coming into the market. Sometimes if you're looking through the print and you're looking at all the numbers, sometimes it's evident when more volume is coming in because every bar has a volume cluster. It may not always be evident when a significant amount of volume is coming in at any one time. And I've got a very simple tool that I use to alert me when that's happening. So we're looking at when and where unusually high volume comes into the market. Again, the volume cluster analysis gives us the ability to see where volume is coming in bar by bar, and also what kind of volume it is. And then we want to make sure that we understand what the effect of that volume is having on price. So for example, if we can see that we have a green volume cluster analysis, we know that a lot of contracts are hitting at the offer, lifting the offer, lifting the offer. What we're looking for inherently is, will that move price? And if the answer is yes, they're being effective at moving price, then we're looking higher to see where sellers might step in. If the answer is no, they're not very effective at moving price, we can see that the buyers are being held, then we want to take note of that too, and we might want to look lower. But depending upon when that volume comes in, where it's coming in, and what the effect is of that volume on price will give us information about whether we want to, if we're in a trade, whether we want to get out of that trade, extend that trade, etc. But again, it's market-generated information, and it is information that only comes from the market, and that high volume, when the market generates more volume, it is usually a great sign for us and a great tool for us in our trading. We also want to take a look at where buyers and sellers relent, typically shown by weakness in the print. So if we see price unexpectedly start to move lower, for example, and we look at the print and we can see that the sellers have relented, meaning there's just a lot of blue numbers, but also not just blue, but they're lower numbers. We can see that, in fact, sellers have stepped aside, so to speak. We want to make note of that, and what it's saying is in that area, buyers don't see value, and we want to, as part of the auction, understand and make note that that is an area for the day at that point in time of weakness by the sellers. And so we'll want to see if price does pull back to that area, if we get continued weakness by the buyers. If we get continued weakness by the buyers trying to push price up, selling come back, price is moving lower. If price is moving lower, sellers have relented. If price is moving higher, buyers have relented. When price pulls back, we want to see that weakness begin again to take a trade in the other direction. We also want to take a look at the print on the high and low edge of a rotation. So if price is in one of those 3-point rotations, it's moving up and down, or 5-point, whatever it might be, we want to look at the edges at the print. At the top, we want to see if there's weakness to the offer, strength back to the bid. That would be a good indication of an opportunity for a trade short. And at the bottom of that rotation, we want to take a look and see, of course, if there is weakness at the bid, strength back at the offer, which may give us an opportunity for a long back towards value, VPOC, volume point of control, and potentially back towards the top. So those are areas and things that we're looking for. The other thing that I mentioned yesterday was, especially in the ES, the pre-market transition, which is from about 7:20. It's different days to days, but I'm starting to look for evidence of the U.S. market starting to impact or come into the ES around 7:20 to 7:45 Eastern. And I start to watch what happens to the auction, what happens to price with that additional volume, and that starts to set the context for me for the pre-market, potentially a pre-market trade. And let's say, for example, I can see buyers coming in around 7:20, and they're having an effect on price. They're actually able to move price, and then price moves down, price moves up. We see this rotation, but I also see buyers holding any specific area on any pullback. Then my mindset, not a bias, but my mindset is these U.S. buyers have been trying to push this market up. I need to look below. I might put a little bit more weight on a long opportunity in a trade plan that I have, looking for a test lower. But then the open starts to become very important, and what I'm trying to do at the open is confirm if that's still the case. If it is, then I'm typically looking for longs on a pullback, and if something changes, then I will adapt my trading plan. So if we're using the print as a process for trade entry, remember we can use it as a process for gaining market context and also as a process for trade entry or trade management. These are the things that we're watching for. Specifically, the activity at the bid and the print at two different levels, at least two different levels, if not three. And I talked about that yesterday, showed you an example of that, and I can bring this over just to go through what I'm talking about again. When I'm talking about looking at the print at these different levels, let me see if I can expand this a little bit. So price comes down to this level here. And by the way, this was our open range yesterday between 24 and 22, this 2250, 75 level. So as price came down, let's say I'm looking for a pullback in a short. I see the weakness at the offer. I see the strength at the bid. And yesterday, if you remember, a pullback occurred. I was looking for a potential short, but there was strength one further down, one level down, strength at the offer, weakness at the bid. There was strength at the offer, weakness at the bid. So I look a couple levels deeper just to see what the buyers and sellers are doing. And in this case, I would need to see strength coming back in at the bid, and I would need to see the weakness at the bid going away. So in order for me to get short. So I'm watching the auction not just at this level, at the top of this rotation, but I'm also watching it two levels lower. And remember, there's always two prices. So the combination that I'm watching is the relationship between this 25.50, 25 quarter, 25 quarter, and 25. And as this, again, this represents an opportunity, and this was a low volume area for the overnight at 25.75. So this was an opportunity, and this is the setup in the print that I would be specifically looking for. I want to see buyers begin to get weak. I want to see sellers start to get strong at this low volume area, and I can show that to you. We're going to get into this today, so so this is an area that I would look for the sellers to start stepping back in, and they have. And what I can see now is there's not really much conviction on the part of the sellers yet, not much conviction here. And so I would start shoring up this trade and making sure that I did not lose on this trade. I can see strength coming back into the offer here. Even though we have a selling cluster and a selling cluster in the volume cluster analysis, what the print right now is telling me is the selling that occurred up here, I don't see the same strength as I did. And the other thing that I don't see is the weakness again in the buyers at the offer. I'm seeing strength come back into the offer, and what I don't see yet is the strength back into the at the bid with the selling. What that tells me is if I were into a trade here, let's say at 25.50. Not that this trade wouldn't work, but the market information is telling me that this is at additional risk. It's not saying it won't work. It's just saying that there's additional risk to that trade, and I would need to watch carefully as to how the auction is developing in the print. So that is one of the ways that we use the print specifically at the two levels to identify trade entry and then trade management. Right? Do I want to take more profit? Am I at risk of getting stopped out? And then manage objectively. I mean, and I can tell you that when I have these tools, I don't feel like I can control price, but I know that I can control my risk. And when I can control my risk, I have some sense of control, and I can stay objective. I'm not nervous or anxious in a trade because I at least have that control. So if an example here, if I'm long, like I just talked to, well, if I'm long at the bottom, I want to see weakness at the bid, strength at the offer. And like I just showed you, if I'm looking for a short, I want to see weakness at the offer and strength at the bid. And I want to see that at my level that I want to take the trade. But I'm also, again, making sure that I'm looking 1 to 2 levels below that, and that I'm also confirming that if I'm short, that buyers are in fact relenting and the selling or activity at the bid is increasing. Does that make sense? Yep. Okay. I know it's early and we might be a little slow in getting the cobwebs out and getting going. So I'll stop a couple of times and just ask that question as we review. The print and order flow is the only truth that you have in the market, and I made comments to this yesterday specifically. This is very foundational and key. It is the only thing that you can hang your trade on, kind of hang your trust in, because it's all that you have that you know. There's nothing else that you know in the market. You don't know if buyers are going to step in here. You don't know if sellers are going to step in here. You don't know what's going to happen to your trade. And again, it's one of the crazy things about trading, and it's one of the great things about trading, depending upon your personality. But understanding this really is the first step in achieving greater consistency in your trading and managing your risk. Learning how to read it for context and trades is the second step. So I think that most of you can see, like the example I just showed you in reading the print, that it makes a whole lot of sense that if I'm looking for a short, I want to see weakness at the offer and strength at the bid, and if that changes, when is a trade at risk, and when is it likely to continue to work? Let me just bring this over here. So again, in reading this print, my system is a little bit slow to respond this morning. In reading this print, right, this was a level, this is a low volume area from the overnight volume profile, low volume area. So this is where I'd be looking for, and we're going to talk through what low volume areas mean and why I'd be looking for a trade there. We're going to talk about that today. And as price started coming back down, again, what I saw, weakness at the bid, even though there was some strength. And this even gave me more concern, or said I had higher risk. We had strength back down, relative strength back down at the bid, which was met by relative strength. Remember, at any given price, the bid and the offer can both be strong because we're comparing it horizontally. So there was not only relative strength at the bid, but there was relative strength at the offer. And then we had the green volume cluster and price starting to move up with weakness back into the bid. So what that meant is that this trade, again, at 25.75, or let's say I got in at 25.50 on the short, was more at risk. And just to be real clear, what I don't know if sellers will re-engage at 25.50 and push this down to 1920. That very well may happen. But I am not paid as a trader to predict the future. I'm paid as a trader to watch the print and respond and manage my risk. It's only by doing that can you survive the day, survive any drawdowns and losses, and come back another day. So one of the things we're going to get to this week is as you get into trade and you look at trade management, you're going to get to the point where you identify if your risk is increasing in a trade. It doesn't mean that you get out of a trade because you may have a range, you may have a stop 5, 6 ticks away for a good reason. It doesn't mean if, for example, I'm short and we get strength back in at the offer, it doesn't mean the trade won't work. All it means and what you have to get yourself trained is see it and understand it as a higher risk. That's all. And then you watch the print and you stay objective. You stay objective, and then you make a decision based on what's happening in the auction. Right. And I can't stress enough, remaining objective in your trading is one of the, it's not a secret, it's one of your greatest advantages in overcoming any psychological issues you have in trading. So if you get into trades and you feel, and we're going to talk more about this when we go into psychology, but if you get into trades and you often find that you feel anxious, you feel nervous, you feel my trade is just sitting there, I can manage my stop, but I'm managing my stop based on price, where price is, not anything else, then the number one thing that will correct that for you is learning how to read the print and the order flow to manage your trade and stay objective. So doing this is the first step in reading order flow, and then spending time with it and learning how to read it, reading the order flow for context and trades, that's a second step. Because once you can do the first and you start to understand how risk increase, not even risk, but what the probability is that price will move higher when the print starts looking like this, and what the probability is that price will go lower once the print starts looking like this, then you can start to put those things together to build context over time. And you can start to see points in the auction, even just in the print, points in the auction where you can say, yeah, this is where buyers are holding, or yeah, this is where sellers really have conviction. And that will help you in getting confluence for trades. All right, so let's talk a little bit about the different objectives for today. First of all, I believe it's important to understand the history and the role of the volume profile. I mean, why are we even using this thing? Why is it so important? Why do I talk about it so much, give it so much credibility? The history and the role is important to understand. And then I want to talk about the elements of the volume profile, and then understand the power of the volume profile across time frames. Remember, one of the things that I talked about yesterday, one of the principles of any market is that there are different participants with different objectives in any given market. And when I say objectives, I mean entry points and exit points. So we know that there are participants who are looking to hold on contracts longer than a day, and they're looking for different price objectives. So understand how to utilize the volume profile across time frames to gain confluence of the different participants and find those areas that are really likely to give you a great trade. In fact, and we've been in nosebleed territory on the ES and all new highs for some time now. But when the ES was back down towards the 1500s, when I had confluence across the different time frames, long-term, mid-term, short-term, I didn't even need to wait for the print. I could set my limit order a tick ahead of those levels, and a high percentage of the time I would get taken in before I knew it. I had my first target and my first scale out of the trade. They are truly that powerful. In fact, I used to, talking to a friend and going through this, I had a friend once, excuse me, I had a friend who used to call them Moneyball because they just worked that well. My point is that when you start to understand the confluence of these levels across the different time frames, because there are different participants in the market, they become incredibly powerful levels for trade. So understand the volume profile in the context of the auction process. So how does the auction process and order flow actually build the volume profile? And we're going to talk about that a bit today. And then understand how to use volume in building a trading plan, placing trades and trade management. When I say volume, using a volume profile and building a trading plan.